Let us solve one more question of capital budgeting. 5.1.5. ASC Manufacturing Company is conducting a proposal to replace one of its existing machine. Now it will be an interesting point because the decision making is not purchasing of new machinery only. It is replacement of machinery. That is, I will be selling old and purchasing new if I am accepting the project. So what is my project? Should I accept or should I purchase a new machinery and sell old machinery? In this connection, the following information is available. The existing machinery was bought 3 years ago for 15,40,000. It was depreciated on SLM basis and has a remaining useful life of 7 years. So total life was 10 years. 3 years have already passed. Remaining useful life is 7 years, and we are talking about old machine and not new machine. Its annual maintenance cost is expected to increase by 40,000 from 6th year of its installation. Try to concentrate. I'm drawing a number line for old machine. This is today. It was purchased before 3 years. It will be, this is -3. This is today. Useful life of 7. Total useful life of 10 years. And we are talking about old machine. And what it is saying, it is expected to increase 40,000 from the 6th year of its installment. So 3 this and 3 more this. So after 3 years from today and 6th year from its installation, they are going to increase there will be a maintenance cost increase of 40,000. Its present realizable value is 6,50,000. So it can be sold today for 6,50,000 rupees. So if you are taking a decision of replacement, you will be selling this machine. And if you are selling this machine, it will be your cash inflow. The purchase price of CNC machine. This is a new machine. So we are talking about new one. Is costing 27 lakhs. And its installation expenses is 95,000. Will be incurred. Subsidy equal to 15% of purchase price. So it should be taken as 27 lakhs. Will be received at the end of first year. So this is at the end of 0 year. Your expenditure will be 27,95,000. And at the end of first year, you will be getting subsidy of 27 lakhs multiplied by 15% from government. That is 4,05,000. This will be cash inflow for us. It is subject to the same rate of depreciation. So now this machinery will be having a useful life of 7 years. And it will be having same, that is a straight line method of depreciation. Its realizable value after 7 years, this is scrap value, 5,70,000. With the CNC machine, annual cash operating costs are expected to decrease by 2,16,000. So there will be a benefit in cash flows of 2,16,000 from 1 to 7 years. This is the reason why you are purchasing new machine. In addition, CNC machine would increase the productivity on account of which the net cash revenue would increase by 2,76,000. This is again a benefit. Cash inflows of 2,76,000, and this will happen from today itself for 1 to 7 years. Tax rate is 30%. Cost of capital is 11%. Advise the firm whether to purchase. No. Replace the existing machine with a CNC machine on basis of NPV. All right. So first let me go to cash outflows. What cash outflow happens if I replace my machinery? Please concentrate. If I replace my machinery, what is the meaning of replace? Replacing old with new. What will happen today? First, you will be selling old. So there will be cash inflow of how much? 6,50,000. What will happen today? You will purchase new. If you will be purchasing new, how much will be cash outflow today? 27,95,000. Sir, we are getting subsidy, but subsidy is a cash inflow at the end of first year. So we will be purchasing new at 27,95,000. So if you replace your machinery, your cash outflow will be 27,95,000 minus 6,50,000, which will be your cash inflow. So net cash outflow at the end of 0 year will be only 21,45,000. 21,45,000 at the end of 0 year. This will be cash outflow. Let us think about cash inflow. First, you are getting some direct benefit, then you will be even getting some indirect benefit. Let us first talk about some direct benefits. From 1 to 7 years, I am having benefit of cash flow of 2,16,000. But once you are having a cash benefit, you will have to pay the tax. And what will be after tax figure is 1 minus 0.30 because 30% is the tax rate. See, this is your income. Understand, this is your income. You will have to pay tax of 30%. So after tax benefit will be only 2,16,000 into 70% for 1 to 7 years. This is 2,16,000 multiplied by 0.7, which is 151,200. And this will be my cash inflow. Again, for 1 to 7 years, I am having benefit of 2,76,000. 2,76,000. So I will have to pay the tax. 1 minus 0.30, 30% tax. Means after tax cash flow will be this 2,76,000 into 0.70. 193,200. Third, but interesting. See, after 3 years in old machine, you were going to incur 40,000 rupees for 6th, 7th, 8th, 9th and 10th. So last 5 years, you were going to incur 3, 4, 5, 6, 7. Last 5 years, you were going to incur 40,000 rupees had you continued with old machine. Now you are purchasing new machine. So if you are purchasing new machine, this cost will not be incurred, which is your again benefit. So from 4 to 7th year, 3, 4, 5, 6, 7, sorry, 3rd to 7th year, you will be having a benefit of 40,000 rupees. I think I've rubbed something. This is 276 and this is the benefit. So for 1 to 7 years we will be having, sorry, this is 3 to 7 years I will be having. Why third? From original date it was the 6th year, but 3 years have already passed. So now only 3 years will be pending. 3 years, 6th year from original date is 3 years from as on today. So from 3 to 7th year you will be having benefit of 40,000 rupees. And again, if there is a benefit, I will always have to find out a post tax benefit. There will be a benefit of 40,000, so there will be a loss in tax, because now that amount will not be available for tax deduction. So you will have to consider tax on it whenever there is a benefit. This is from 3 to 7 and this will be 28,000 rupees. Again, it is my benefit, I will be adding it. I will be also getting from 1 to 7 years. This is the savings in operating cost. This is direct benefit. This is also direct. We will be also getting benefit on depreciation. Now, how to find out benefit on depreciation? Try to understand, we were already having old machine. Now we are purchasing new machine. In old machine, how much depreciation we were providing? 15,40,000 divided by 10, because it was for 10 years. 15,40,000 divided by 10. So we were having straight line method of depreciation of 1,54,000. If we are purchasing new machine, first we will have to decide a depreciable amount. What will be depreciable amount? Cost of 27,95,000 minus the subsidy, because subsidy you are getting a benefit even if you are getting after first year, that is your benefit. Subsidy amount is 4,05,000. So net cost will be 27,95,000 minus 4,05,000, which is 23,90,000. This is net cost minus scrap value. Now this is also having a scrap value of 5,70,000. 5,70,000. So this will be my depreciable amount, 23,90,000 minus 5,70,000, 18,20,000. Divided by 10, no, divided by 7. This machine will be used only for 7 years. That's a CNC machine. 18,20,000 divided by 7. It is 2,60,000. Will be depreciation for new machine. So depreciation for new machine is the 2,60,000. Try to concentrate how to find out the tax benefit for replacement. First, how to find out tax benefit of old machine? You were already getting tax benefit of old machine of 30%, right? So 15,40,000 into 30%, which is 4,62,000. So you were already having a benefit of 4,62,000. Now you will be having a benefit of 2,60,000 into 30%. Which is 78,000. You were having not 4,60,000, it was 46,200. 1,54,000 into 30% is 46,200. So you were already having a benefit of 46,200. Now you are getting a benefit of 78,000. So if you replace the machinery, what will be your benefit is 78,000 minus 46,200. Sir, no, we are getting benefit of 78,000. No, you are getting benefit of 78,000, but you are already getting benefit of 46,200. This will become your opportunity cost, and it is always important to consider opportunity cost at the time of decision making. Now you will not be getting this benefit. You will be selling this old machine. So what benefit you will be net getting is the 78,000 minus 46,200. 31,800. It is tax benefit on depreciation, no, additional depreciation, because that is the only that is the benefit which you are actually getting for the purpose of decision making. So 31,800, and it is directly tax benefit. A tax benefit is positive, so positive 31,800 for 1 to 7 years. This is benefit on depreciation. Other benefits which I'll be getting, one is scrap value of new machine. Scrap value of new machine will be only at the end of 7th year, which will be 5,70,000. Sir, cash inflow of old machine that we have already deducted, right? So when we will be purchasing, we will be using the 6,50,000 and net will be paying only 21,45,000. So for cash outflow, I will be considering 21,45,000. Sir, subsidy that we have not considered, we need to consider it. Subsidy is 4,05,000, but it will be at the end of first year. Subsidy only at the end of first year. It is again benefit or cash inflow 4,05,000. One more. We are selling old machine today. Sir, it is SLM method. Yes, but you are selling it before your period. What depreciation you are providing for old machine, or let us consider old machine. At what rate old machine was purchased? 15,40,000. Up till today, how much depreciation would have been calculated? 1,54,000 into 3, because 3 years have passed. So 4,62,000 will be depreciation for 3 years. So what will be book value today? 15,40,000 minus 4,62,000. This is 10,78,000. 10,78,000 will be book value today. All right, let me do it over here. 10,78,000. It is book value as on today. After 3 years of original purchase of machinery, this is book value today. It is sold today at what rate? 6,50,000. 6,50,000 sold. There is a loss of 10,78,000 minus 6,50,000. 4,28,000. 4,28,000. There is a loss. Sir, we have already considered the selling price, which is our cash flow. Agreed. But if there is a loss, there will be tax benefit on loss, which will be 4,28,000 into 30%. So tax benefit on loss is 4,28,000 into 30%, which is 1,28,400. 128,400. And this I should consider. Now understand, there are two options. Normally the tax benefit arises at the end of the year, because you need to pay tax at the end of the year. You may take it this benefit at the end of 0 year, or you may take it at the end of first year. Both answers are correct answer. There is no problem in both the answers. I am taking this is the benefit at the end of first year. Sir, this net realizable value is not cash inflow. We have already considered it over here. What we are considering right now is a tax benefit on sale of old machine, which I am assuming is at the end of first year. So this will be plus, tax benefit was 128,400. So tax benefit on sale of new machinery, it will not happen. Straight line method, we have used it for all 7 years. After 7 years, it will be sold at a scrap value of 5,70,000. Written down value will be also 5,70,000. And so there will be no other benefits which will be arising, or there will be no capital gain or capital loss. So there will be nothing tax benefit which will be available. These are all the benefits that we are getting, and this is the money which we need to pay today. What I will be doing, I will be finding out present value of cash flows at the rate of 11%. Logically, these are cash flow for 1 to 7 years. Factors are given, not given, not given. So 1 to 7 years, the factor I will be finding it out. 1 to 7 years, the factor at 11% is 1 divided by 1.11 is equal to m plus 7 times. 2, 3, 4, 5, 6, 7. This is factor for 7 years. 4.7122. 4.7122. So that I can use it over here also, 7122. So if I multiply this two, I will be getting present value, right? This is from 3 to 7. How to find out factors from 3 to 7? Concentrate. 1 divided by 1.11. 1, 2, 3, m plus 4, m plus 5, m plus 6, m plus 7, m plus. MRC, it is 2.9996. 2.999, approximately 3. Which is this factor? Third, fourth, fifth, sixth, seventh of 5 years. Factor is 2.9996. Let me once again explain you how I have solved it. 1 divided by 1.11. First and second year I have missed out. Then third, fourth, fifth, sixth, seventh year I have added into m plus. MRC is nothing but the factor. 1 to 7 years I already know the factor, 4.7122. 7th year factor, 1 divided by 1.11. 1, 2, 3, 4, 5, 6, 7. It is 0.4817. 0.4817. Factor at the end of first year will be 1 divided by 1.11 is equal to 0.9009. And this is also at the end of first year, 0.900. I will be finding out present value of cash inflow. Present value of cash inflow will be 151,200 multiplied by 4.7122 is equal to m plus. 193,200 multiplied by 4.7122 is equal to m plus. 28,000 multiplied by 2.9996 is equal to m plus. 31,800 multiplied by 4.7122 is equal to m plus. 5,70,000 multiplied by 0.4817 is equal to m plus. 4,05,000 multiplied by 0.9009 is equal to m plus. 128,400 multiplied by 0.9009 is equal to m plus. MRC is 26,11,827. 26,11,827. 26,11,827 rupees is present value of cash inflow. What is present value of cash outflow? 21,45,000 minus present value of cash outflow 21,45,000 45,000. This is the positive NPV of 26 lakh 11,827 minus 21 lakh 45,000, 466,827. Positive NPV of this particular project. If the project NPV is positive, we should accept the project. What is acceptance of the project? Sell old and purchase new. This is our decision. Our decision is not only to purchase new, sell old and purchase new. And so this type of decisions are known as replacement decisions. And as our NPV is positive, never speak I will purchase new machine. Always say I will replace old by new machine. This is replacement decisions positive. See, whenever we take depreciation, we take additional depreciation. When we take cash flow, we take additional cash flow. When we even take cash outflow, we consider selling price of old machinery and consider cash outflow. This is a purely replacement decision. Excellent question as far as examination or even your understanding is concerned.